Hi, and welcome back or welcome to Sidekick COO. I'm Sandra B., your Sidekick COO, and today we are going to be talking a little bit about, as a small business owner, what should I be focusing on financially speaking? Obviously, as a small business owner, solopreneur, freelancer, whatever you want to call yourself, you need to know your numbers in your business. So you need to understand what you're doing that's profitable and what you're doing that's not profitable. And you need to understand how those things fit in your business. A lot of the times when small business owners first get started, when I'm going to say specifically when they're not like entrepreneurial mindset people, like we all call ourselves entrepreneurs, but I really feel like there are people who are entrepreneurs who go out and they create a business that's meant to be sold or to have investors brought in or to be expanded or to made into a franchise or whatnot. So those people, when they first get started, they tend to do they have a big business plan. They know their competition. They know who their customers are. They have done a ton of research. They know all their numbers. They know their break-even point before they even start. They really do dot their I's and cross their T's. And to me, those people are those are the entrepreneurs. Those are the people who, before they get started, they know their end game. If that is you, then this is probably not going to be a video for you. But if you are like most of the business owners that I know, and most of the business owners that I work with, and probably 90% of the business owners out there, you probably started your business because you wanted some freedom. You didn't want to work for somebody else. You had a skill or a talent that you really wanted to monetize. You wanted to just work for yourself, and you probably didn't have an end game in mind. You just wanted to make enough money to live on and eventually make enough money to do all the things that you wanted to do. If that is you, then this is probably going to be a video that you need to hear. Those business owners, those small business owners, those solopreneurs, those are the ones where when I speak to them, it's really quite often that I find a lot of the times, especially for the first year or two, they're doing all their own bookkeeping. They're doing all their own taxes. They may or may not be incorporated. They're trying to do it all themselves. And when it comes to your finances in your business, I highly, highly, highly recommend that one of the first things you outsource is your bookkeeping, and one of the first people you engage with is an accountant. You really need to have a good accountant and bookkeeper. That could be the same person or it could be two different people. Shop around, find the ones that are best for you. But you really need to have those in your back pocket. And the reason you need to have those in your back pocket is because as you grow as a business owner, there are things that you need to do. A lot of people, they incorporate right away. And depending on where you are, this may or may not be a good idea. Where I am, it's not always a good idea to incorporate right away. You often want to wait until you meet a certain income threshold or revenue threshold rather, or profit threshold before you incorporate. And there's a lot of reasons for that. And I don't know those reasons, so I'm not going to tell you those reasons, but a good accountant will. A good accountant will help you understand when is the right time to incorporate for you and your business? What are all the things you have to do for your business once you're incorporated? What are all the things you have to do for your business before you're incorporated? A good accountant and a good bookkeeper, they're going to help you save money because they are going to help you legally find the best way of dealing with your revenue that is going to be the most beneficial tax-wise, legally, I'm going to say. There are some accountants and bookkeepers out there that will do things a little shady. So just be careful. Make sure you're finding somebody who has a really good reputation. Really look into them. Make sure that they don't have any issues before you engage them. You really want somebody who knows what they're doing, who is going to help you navigate the crazy world of finance and make sure that you're not overpaying your taxes, but you're also not getting yourself in trouble by doing anything shady. And a good accountant is going to help you with your tax planning. They're going to help you understand what money you should be putting aside in order to save for taxes, which is something that a lot of business owners don't do when they first start out. They kind of just take all the money for themselves and forget that there is a tax bill to pay at the end of the year. They're going to, like I said, help you understand when you should incorporate, and they're also going to go through your numbers with you. So if you have a really good bookkeeper, they're going to do your books at least quarterly, if not monthly, and they will probably send you your profit and loss statement. They might send you your balance sheet. They don't often go over it with you unless you ask, but your accountant will go over all of those financial statements with you at least yearly when you do your either corporate tax return or personal tax return, whichever one you're doing. I do highly recommend asking your bookkeeper to explain any numbers that seem out of whack, just having them kind of go over what your financial statements mean and how they differ from last month or last year at the same time, just so that you have an idea of how you're doing on an ongoing basis. Making sure that you tell your bookkeeper and you tell especially your accountant anytime there are any major changes in your business. So for instance, if you put out a course, maybe you put out a course and it takes off and you end up increasing your revenue by $100,000. You have a $100,000 launch that you didn't have last year. Now you have that, and that is going to drastically affect things for your end of year tax planning. So definitely let your accountant know as soon as you know that there is a change in your business. Make sure you let them know. Even if you're not sure that there's going to be a change, it's always good to give them a heads up about something that you're doing, and so that you can understand in advance what you need to be double checking on. Especially like right now, there are so many changes happening in regards to even tax collection. So collecting sales tax in different locations. 5-10 years ago, a lot of the digital stuff, there was many things that you didn't get charged tax on because it wasn't part of the tax regulations or whatever. But now things are changing. Governments are realizing that there is a lot of digital commerce happening that they are missing out on. So
taxes, taxes, beautiful, lovely taxes.
A lot of things like your software and stuff that before you probably didn't pay tax on, you're going to start seeing that you're paying tax on certain ones. So that's all changing. So you really want to make sure that you have those conversations with your bookkeeper and or your accountant to make sure that you're collecting tax, or you're making sure that tax is included in the purchase and that you understand that that's going to be completely taken off of your revenue. So just so you know what your liabilities are, and you make sure that everything is happening in accordance to rules and regulations that you might not be aware of. In addition to having your accountant and your bookkeeper and having them explain your reports to you and having them send you your reports, the other thing you want to know about is on a regular basis is your cash flow. You really want to keep that in mind. Like, again, if you're a serial entrepreneur or you're building something huge, you have investors, things like that, this is probably not going to be for you. Cash flow is important, but a lot of businesses run cash flow negative for a long time. But if this business is meant to replace your personal income and you can't afford to take a loss, if you can't afford to float your business for a while, then you really need to understand what your cash flow is. You need to understand what's coming in on a regular basis, what's going out on a regular basis, and what that net result is, so that you can see where you're spending more than you're bringing in, and where the opposite is true. So I personally do my cash flow planning a year out, which is probably overkill, but I look at my cash flow on a weekly basis and I can kind of predict based on what I'm doing. I can see where I might need to shore up my revenue, and I can see that pretty far in advance, which is always super useful. So looking at your cash flow, if you're not sure where to start, ask your accountant or your bookkeeper. They should be able to help you out. And the other thing you should be looking at as a small business owner is your own personal net worth. So you're in business to make money. Like, that's just the truth of it. Sure, you might want to make a difference. You might want to make an impact. You might want to leave a legacy, but in the end, you need to make money. When you're doing all your financial planning, when you're doing all of your cash flow monitoring and all of that stuff, you also need to be looking at what your net worth is personally, because as you grow profit in your business, you also want to be growing that net worth on your personal side. So what you're going to want to do is you're going to want to engage the services of a financial planner. And financial planners, a lot of the time, they're not going to charge you any type of retainer or anything like that. A lot of the time, they don't even charge to meet with you. Basically, if they do sell you any investment products or anything like that, that's how a lot of them get paid. There may be some, depending on what you need them to do, they may charge you for meetings and work and things like that. But a lot of them do consultations for free, and then also will sell you investments and things like that. So, but most of them, it's not like they're pushy. They're not trying to push you into anything. They are just there to advise you as to your own finances. And depending on where you are, there are services out there that are like 100% free that you can go and do financial planning 100% free all the time. It's a public service. So you can look for those. They're not everywhere, but you can definitely look for those. But yeah, definitely getting a financial planner in your corner so that as things change in your business, they might change you in your life personally, and you know what you're supposed to be doing with that money, where to invest it, how to get it working for you, making sure that you're increasing your personal net worth. So that's it. Those are the only things I wanted to cover today. But if you take anything from this video, please take that you do need to know your numbers. You do need to be looking at those numbers. Don't just look at your top line revenue. That is not a great indicator of how your business is doing. That's just a great indicator of how much money you manage to bring in, but it's not an indicator of how profitable you are. You need to be looking at your profit. You need to be looking at your cash flow, and you need to be looking at your personal net worth. If this video resonated with you at all, please do not forget to like and subscribe. A lot of people aren't actually subscribed yet, and people who think they are subscribed actually aren't. So if you're not sure, hit that subscribe button. All right. Also, pass this along to anybody you think needs to hear it. If you were thinking, oh, I know somebody who doesn't have an accountant right now and they really should, send them this video. I would really appreciate it. Don't forget, together we thrive. Have a great one.